స్టార్ట్ స్టార్ట్ చేయనా సార్ స్టార్ట్ అయ్యలేదా ఓకే సో వెరీ గుడ్ మార్నింగ్ టు all of you. So we already discussed the how to recognize the PPE initially. Okay, so it's an initial recognition. So the journal entry, how to pass the journal entry at the date of acquisition of the PPE. So the next concept is subsequent recognition. Subsequent recognition means at every reporting date how to value the PPE. Okay. So in this, India Institute provides us two models, cost model and revaluation model. We can follow either of the models. If you follow cost model, you no need to provide the revaluation gain or revaluation loss. But if you are wanted to follow revaluation model, we need to find out the fair value of the asset and need to compare with the carrying value. It should increase the carrying value to the fair value by giving the effect the revaluation gain or revaluation loss. So there are two approaches for the subsequent recognition of PPE. So I already discussed how to recognize the PPE initially at cost. So if it is a cash price, if it is a cash price, should be recognized at cost. If it is we have acquired asset by the exchange of another asset, the fair value of asset given up, we should follow this order. What is the third element? If you are acquired asset on credit basis, we should record the asset at cash price. So initially the recognition of the PPE is completed. Then subsequent recognition. With respect to subsequent recognition, super cost model and revaluation model. So just India 16 gives the two options. Either if you want, you can follow cost model or you can follow revaluation model. Okay. If it is a cost model, we no need to find out the fair value of the asset. Then what is the revaluation model? In revaluation model, the carrying amount, the opening carrying amount should be opening carrying amount of PPE should be compared with fair value of PPE, compare with fair value of and need to provide fair value gain or loss. So we should adjust the carrying amount, we should adjust the opening carrying amount by giving fair value gain or fair value loss, and it should be equal to the fair value. So if you wanted to follow the revaluation model, the opening carrying value should be shown at fair value of the PPE. This fair value is need to find out at every year reporting date. Reporting date means balance sheet date. But if you wanted to follow cost model, there is no need to find out the fair value of the asset to compare with the opening carrying amount. Okay, so I'm just talking about the opening carrying amount because the revaluation is always done at the beginning of the year. Okay, so it's complete. So cost model means just it's opening carrying amount. How you got the opening carrying amount? Cost minus depreciation. Then you got the, after that we need to give some revaluation, impairment adjustments. Then you got the closing carrying amount. Last year closing carrying amount becomes this year opening carrying amount. I will give you the format for this. So before getting to the format, we need to identify the few elements. Okay. So one of the element is fair value gain or fair value loss. So let's see what is the fair value gain or fair value loss. Before going to that, here they have give two options, right? Option 1 and option 2. So here my question is, can I follow one PPE for cost model, another PPE for revaluation model? So here PPE means it's a, under PPE there are lot of class of assets. So for similar class of assets, I need to follow only one model. So I will show you the class of these are the class of assets. So motor vehicle, furniture and fixtures, land, ships, machinery, so on. So if you wanted to follow cost model for ships, so you wanted to apply cost model for one ship. So you need to apply cost model for the remaining ships. Okay. So if you wanted to follow revaluation model for the machinery, you need to apply the same revaluation model for the remaining machineries. Of course, you can follow different models for different class of PPEs, but the same class we should follow the same method. We can follow either cost model or revaluation model. But if you wanted to follow one model, it should be applicable to the entire class of assets. Okay. Then second element is subsequent recognition is there. Then second element. Here I am just showing the how to find out the carrying amounts on the balance sheet in case of the cost model. Cost minus accumulated depreciation minus accumulated impairment loss. Here the fair value and revaluation date, post revaluation depreciation, post revaluation depreciation and impairment loss. I will tell you what is the impairment loss and what is the depreciation and what is the next value. We already discussed cost. You know what is the cost. Okay. Then we need to discuss these things. So fair value and revaluation date. So what is meant by fair value on the revaluation date? How to calculate all these elements? Let's look into this. Okay. Treatment of the revaluation amount. How to treat the revaluation amount? If it is a first time revaluation gain, it should be transferred to OCA. Whether it is a realized gain, I'm asking you whether it is a realized gain. No, it's an unrealized gain. If you really sold this asset in the market, you can get that amount. Okay, but you are here, you are not selling the asset, just you are finding the fair value of the asset. So that's why if the fair value is greater than the carrying amount, you will get the fair value gain. Then that gain should be transferred to OCA. I already told you OCA means other comprehensive income. Super. Other comprehensive income. So what is the journal entry? Asset should be need to increase it, because when I compare with the carrying amount with the fair value is more. So I should increase the carrying amount to the fair value. So asset account debit to OCA. Directly you can use the OCA account. So asset account debit to OCA account. So the asset is increased by the revaluation gain amount. Then second thing, if it is a loss, so you have compared carrying amount with the fair value. Okay. Then in this case, carrying amount is greater than fair value. So in this case, what is the amount? Carrying amount is greater than fair value, then you will get the fair value gain. In this case, carrying amount is greater than the fair value. So what I need to do? I need to decrease the asset. So to asset. Then what is the element I should be used? P&L account debit to. Okay. The revaluation loss should be transferred to P&L account, and the revaluation gain should be transferred to other comprehensive income. Okay. Then what is the next element? Subsequent revaluation. Okay, it is a first time revaluation. In the subsequent revaluation, again it is a loss. Then it is easy, simply should transfer to the P&L. But here we should focus. So initially we have incurred the loss, so we are showing some amount in the P&L as a revaluation loss. Then next we have incurred the revaluation gain. Every year what we are going to do? We need to compare with the carrying amount. We need to compare the carrying amount with the fair value. So if you compare with the carrying amount to the fair value, then next year you will get the gain. In that case, what we are going to do? Generally gain should be transferred to OCA, but it is subsequent revaluation gain. Previously it is a loss. Then the gain should be adjusted against P&L account first, and the remaining gain should be transferred to OCA. The account, the journal entry is like this. So here what happened? Gain. So asset should be increased, asset account debit to first should be adjusted against P&L account. Then the remaining balance should be transferred to OCA. Super. Okay. Then it is completed with respect to loss. Then with respect to the gain. So initially gain, it is transferred to OCA, and subsequently it is gain. Again it should be transferred to OCA. There is no confusion. But initially gain, but subsequently loss, then what we are going to do? Generally loss should be P&L account, but in this case it is a loss, right? What happened to asset account? So first there is a OCA balance, right? So use that OCA balance first. So OCA account debit to remaining loss should be transferred to P&L. First loss should be adjusted against OCA. Here first gain should be adjusted against OCA. Here first loss, right? First loss should be adjusted against OCA. Okay, here first gain should be adjusted against P&L. That is the difference. So let's see. Okay, then what is the second aspect? So we had a discussion on fair value and revaluation. So we have completed cost and fair value discussion. Next, depreciation. So what is the depreciation? So depreciation is a systematic allocation of the depreciable amount over its useful life. So every year we need to set off some portion of the profits aside for buying the new asset in the future. So that is called the depreciation. Because by using this machinery, what I am going to do? I am going to generate the revenue. So to generate the, as per the matching concept, so whatever the expenses to generating this revenue should be transferred to P&L. So some part of the cost of the asset should be transferred to P&L as an expenses. So that is called depreciation. Okay. When the depreciation is, what is the starting date for the depreciation? It is begin when the asset is ready for use. Okay. When the asset is, depreciation of asset begin when asset is ready for use, but sometimes they will give the put to use. If they give both, so you have the date of ready to use and you have the date of put to use, which you can able to take. So in question itself, there is a date of ready to use and there is a date of put to use. So you should take put to use as per the accounting concept. But as per the income tax, the depreciation starts from the date of ready to use. Okay, don't apply this. Of course, only date of ready of use is available in the question. Then we can assume that the depreciation starts from ready to use of the asset. Okay. But if both are given, the put to use should prevail. So we should take the date of put to use as the starting date for the depreciation. Then the depreciation of the asset is ceases, means when should we stop the depreciation? I already discussed the starting date. The starting date is the date of put to use or date of ready to use, whichever is earlier. Then depreciation is ends on date on which asset is classified as held for sale as per Ind AS 105. So you have purchased one asset and you wanted to sell it in the nearby future. That intention should be communicated to the shareholders. So how it is communicated? So you should transfer the asset from the PPE to Ind AS 105 non-current assets for held for sale. So instead of showing it under PPE in the balance sheet, you should show this asset under non-current assets held for sale. So if the classification is made, then depreciation of the asset should be derecognized. Then date on which asset is derecognized. Okay. So the depreciation is, so for the derecognition of the assets, there are several reasons. If you sell it or if the no economic benefits are going to be arised from the asset, in those cases, what we are going to do? We should derecognize the asset. So what is the what is the ending date of the depreciation? When the asset is classified held for sale or the asset is derecognized. Okay. Then let's see what are the methods of the depreciation. Straight line method, annual depreciation equal to cost of the asset minus residual value divided by useful life of the asset. So for our entire discussion, most of the problems is based on this straight line method. Of course, one problem is there, it depends on the written down value method. So reducing balancing method. So they will provide the fixed percentage. We can provide the depreciation as a fixed percentage of the carrying amount. Okay. Then third method, units of products method. This method is not specific. There is no specific problems based on this method, but generally you should know that there is some method called units of production method. So annual production units divided by lifetime production units into depreciable amount. They can provide the annual depreciation. And one more thing, residual value useful life depreciation method should be reviewed at least once at each financial year, and any changes accounted as a change in accounting estimates as per Ind AS 8 accounting policies, changes in accounting estimates and errors. So I don't know what is residual value useful and depreciation method. I will tell you 1 minute. Before going to that, I will give you the formula for the straight line method. Please everyone note it down. I am going to give a, please ignore this formula. I am going to give you a brief and a detailed formula. Straight line method. Straight line method. So how to provide the depreciation under straight line method? I am going to write the formula. Depreciation per annum equal to depreciation per annum opening carrying value after valuation. Okay. So for the purpose of depreciation, you should take the opening carrying value after revaluation, okay, not before revaluation. If you are following the cost model, then opening carrying value is enough because there is no concept of revaluation, right? So opening carrying value after revaluation. Then minus expected residual value minus expected residual value then remaining expected useful life remaining expected useful life. So this is the depreciation per annum formula. So opening carrying value after revaluation minus expected residual value divided by remaining expected useful life. So you always need to follow this formula. Okay. Then what is the next element? So let me have a discussion on major inspection or overhaul or the cost of replacement. So what is major inspection or overhaul? So these are the expenses which can capitalize as the cost of the asset. Generally, what is the rule? The rule is the expenses directly attributable to the acquisition of the PPA should be capitalized until the date of the asset is ready to use. But after the asset is ready to use or put to use, there is few expenses which we can capitalize. So these are the exceptions. What is the general rule? After the date of put to use, the expenses incurred with respect to the PPE should be transferred to P&L, but except inspection and overhaul and the cost of replacements. So when each major inspection is performed, its cost is recognized in PPE if the recognition criteria are met, and any remaining carrying amount of cost of previous inspection is also de-recognized. Next thing is cost of the new part is recognized to the carrying amount of PPE if it meets the recognition criteria, and carrying amount of the old part is de-recognized from PPE. So all these concepts we will discuss with the problem. So what does it mean? Why you are incurring this inspection overhaul expenses, and why you should include it to the cost of the asset? So, so before going to that, I will give you small example. So here the concept is, so as per the depreciation, I should, so what is the depreciation formula? So opening carrying value after revaluation minus expected residual value divided by remaining expected useful life. So for the entire asset, I'm I'm expecting some useful life. But coming to here, it's like component accounting. Component accounting. So what is meant by component accounting? For one asset, it has two useful lives. Okay. For the entire asset, there must be one major part in that asset. So for that major part, it has a different useful life. Then in that case, for that major part alone, I should find the depreciation separately. And for the remaining part of the asset, I should find the depreciation separately. Because for the calculation of the depreciation, what is the formula? Remaining expected useful life. That is also one criteria. Okay, I purchased one car. It's an electrical car. So I paid entire 15 lakhs. Okay. So what is the major part in this car? For electrical car, the battery is the major part. So I assume that this battery forms a substantial part of the remaining asset. For this battery alone, the life is 5 years. For the remaining car parts, the life is 10 years. So what I am going to do now? The depreciable amount of the asset should be depreciated over the useful life of the asset. Means I should follow this formula. So if I wanted to provide the depreciation for this electrical car, if I wanted to do this formula, but in the question there are two useful lives are available. That's why I need to find out the only for the calculation purpose, not for the journal entry purpose. So what I am going to do, I assume the residual value is 0. Assume residual value is 0 and tell me the depreciation per annum 15 lakhs. This is the opening carrying amount divided by 0 divided by 5. What is the depreciation per annum? 3 lakhs. What is the depreciation per annum here? Sorry, it's not 15 lakhs. So it's 5 lakhs only. So with battery, for the battery I paid 5 lakh rupees. For the remaining car parts, I paid 10 lakh rupees. Okay. Then what is the opening carrying amount with respect to the battery? 5 lakhs. 5 lakhs minus 0 divided by 5. Then what is the depreciation per annum? 1 lakh. Okay. Then what is the second element? Remaining parts. What is the opening carrying value of the remaining parts? 10 lakhs minus residual value divided by 10 years. So depreciation is 1 lakh per annum. So I have calculated depreciation separately for the two different parts. Now I need to provide the depreciation in the form of journal entry. So what is the total depreciation? 2 lakh rupees. So depreciation account 2 lakh rupees to electrical car. So this is the journal entry. So for the journal entry purpose, we will not show this differentiation. So we will provide the depreciation journal entry on the entire asset. For the calculation purpose only, so we will find out the depreciation separately for each component. Okay. In the future, after 5 years, what I am going to do now? This battery should be replaced, right? So this is also kind of expenses. Like, so this battery should be replaced. So if you wanted to purchase the new battery, what do I want to do? this battery price should be added to the cost of the asset, right? After 5 years, you bought a new battery. So what you are going to do? Again, 5 lakh should be added to the entire cost of the asset. This is the thing they have given here. That is called cost of the replacement. So this replacement, the cost of the new part should be recognized as a part of the carrying amount of the PPE. Then let's see the problems. Question number 4. So in the same way, the inspection so the concept is same for the cost of replacement and cost of major inspection overhaul. These expenses also, capital expenditures, should be added to the cost of the asset. Okay, these are the mandatory expenses. These are the mandatory expenses. Without these expenses, we cannot operate the PPE. So that's why these expenses are. So A Limited purchased an aircraft at a price of 6,300 crores that require major inspection overhauling for 4 years. So you bought an aircraft. What is the cost of aircraft? 6,300 crores and it requires major inspection overhauling for every 4 years. So after 4 years, you are going to incur some inspection or overhauling expenses. Then estimated life of the aircraft is 15 years. So the aircraft was purchased on 2015. So you bought an aircraft on 2015. On 2015, what is the information you have in your hand? My cost of the aircraft is 6,400 crores. After 4 years, I am going to incur some overhauling expenses. But do you know how much overhauling expense you are going to incur in future? You don't know. That point should be noted down. You don't know how much inspection expenses are going to be incurred in the future. But after in 2019, the expenses incurred is 100 crores. So what I am going to do? This 100 crore also should be added to the cost of the asset. But here the main difficulty is with respect to this 100 crores, what is the useful life? Useful life means by spending of this 100 crores, how many years it going to give benefits to the organization? Only 4 years. Because what they are asking, this inspection expenses should be incurred for every 4 years, right? So this 100 rupees should be charged to the P&L over the 4 years. So here what I'm, but here what is the point here? This 100 rupees should be added to the cost of the asset. Okay. Then, but the aircraft life is different, and this overhauling expenses life is different. So I need to follow the component accounting. So I should provide the depreciation differently for this 100 crores and for the carrying amount of the remaining aircraft differently. But while providing of the depreciation, I need to provide one journal entry. Then second element, in 2020 what happened? Further incurred repairs and maintenance in the engine to raise its capacity by 10% amounting to 70 crores. Now again they incurred the repairs and maintenance expenses. Because of this repairs and maintenance expenses, the capacity of the machinery is increased by 10%. How much? What is the expenses here? 70 crores. Here the question is whether this 70 crores is going to capitalize or not. Yes, we can capitalize it. If normal repairs and maintenance expenses should be transferred to P&L, but only one aspect I need to check whether because of these expenses, whether the increase in the capacity of the plant or not. The repairs and maintenance expenses incurred to maintain the capacity of the plant should be transferred to P&L. Here you are incurring expenditure not to maintain the capacity, to increase the capacity. In that case, it should be capitalized. Capitalized means added to cost of the asset. And one worn out component in the wing was replaced in 2020 at a cost of 80 crores. So one of the component is it's been depreciated fully, so we cannot use further. So what I am going to do, I want to replace that wing in that aeroplane. So what is the cost of the replacement? 80 crores. But the carrying amount of the old component was 30 crores. The scrap realized was 12 crores. Now find the amount to be recognized as an expenses and as an asset in 2019, 2020 and also show the carrying amounts. And the aircraft residual value is estimated at 300 crores. So first, let's start our discussion from the 2015. In 2015, what happened? Okay. So in 2015 means on 1/1/2015, I assume. So it purchased the aircraft in 2015. So I assumed it is 1/1/2015. So 6,300 crores. Again, when should this overhauling expenses are incurred? In 2019. So in 2019, I should include this 100 crores to the cost of the to the carrying amount of the aircraft. Then I need to find out the what is the carrying amount of the aircraft in 2019. 2019 means 1/1/2019 or 31st 3/2019. Mean at the beginning of the year or at the end of the year. So at the beginning of the year. Okay. So 1/1/2019. So in this I need to check whether they're following the calendar year or financial year. They are not giving any information regarding with the calendar year or financial year, but they are giving only 1 year, right? That case I assume they are following the calendar year. So whatever the expenses there, whatever happened on in 2015, I assume it has been happened on first of the 2015. Okay, at the beginning of the year. So at the beginning of the 2015, I purchased one aircraft. So after in 2019, I incurred the 100 crores for the expenses, overhauling expenses. So I assume these 100 crores are incurred on 1/1/2019. So I need to find out the carrying amount of the aircraft on 1/1/2019. So on 1/1/2019, so 1/1/2015 should be recognized at the cost initially 6,300. So I should provide depreciation for how many years? So depreciation for 3 years. So 15, 16, 17, then how many years are there? Yeah, beginning. So I need to provide depreciation for 15, 16, 17, 18. Sorry. So 6,300 is the opening depreciation value. Sorry, opening carrying value. Okay, with respect to the 2015, right? So that is the formula, right? What is the depreciation formula? Opening carrying value after revaluation. There is no revaluation in this problem. Minus what is the expected residual value? What is the expected residual value? 300 crores. 300 minus what is the expected useful life? 15 years. Then what is the depreciation per annum? How much? 400. 400 crores. Next. So I need to provide the depreciation for 4 years. So I need to provide the depreciation for 4 years. Okay. 1 minute. Here, we can start it from here. Okay. So 4 years. So per year 400 is the depreciation. 400 into 4, 1600. So initially on 1/1/2015, the opening carrying amount is 6,300 crores. So I should provide the depreciation for 4 years because I need the value of the PP on 31st 12/2018. It is nothing but 1st January 2019. So after the providing of depreciation for 4 years, what is the carrying amount? What is the closing carrying amount? 4,700. So on 1/1/2019, I have incurred the expenditure of 100 crores. So what is the total carrying amount? 4,800 crores. Out of 4,800 crores, 4,700 crores expected useful life. What is the remaining expected useful life of 4,700 crores? 11 years. What is the expected useful life of this 100 crores? 4 years. So in one asset, there are two useful lives for the different parts of the asset. So I need to provide the component accounting. So I need to find out the depreciation for this 4700 separately and for this 100 crores separately. Let's see the depreciation. What is the depreciation for 2019? Okay. Depreciation for the main component and depreciation for the added component. What is the main component? 4700. So this is the opening carrying amount. Then what is the residual value? 300 crores. Minus what is the remaining expected useful life? 11 years, because already 4 years expired. So 400. So what is the depreciation and added component? It's 100 crores divided by 4. It is 25 crores. So what is the total depreciation for the 2019? 425. So depreciation account debit to aircraft and P&L account debit to depreciation account. So these are the journal entries. And these are the calculation. For the providing of the journal entries, I am not supposed to show differently. So I am not supposed to pass the different journal entries for the different components. For the calculation purpose only, I just dividing the entire asset into two parts. Why I am dividing? What is the purpose? Because it has two useful lives. So for the depreciation calculation, one of the aspect is useful life. If I wanted to calculate the depreciation for the entire asset, I don't know which useful life should be used in the formula. So that is the main problem. Then what is the carrying amount? Closing carrying amount of the asset. So what is the opening carrying amount? 4800 minus what is the total depreciation? 425. Then 4375 is the closing carrying amount. That means as on 31st 12 2019, this is the value. Out of this, what is the main component carrying amount? 4300. What is the additional component? 75 rupees. Out of 100, already 25 is depreciated. So remaining 75 is the balance. Then what happened in 2020? In 2020, one worn out component in the wing was replaced at cost of 80 crores. So one new part has been purchased for 80 crores and the carrying amount of that old part is 30 crores. So what is the first element? I should include this 80 crores to the entire cost of asset. And we should deduct this 30 crores. Old component carrying amount should be derecognized because we need to take it out of the old component from the entire aircraft, right? So this 30 crores also should be removed from the carrying amount. And new asset should be added to the aircraft. That cost of that new component is 8 cut. It should be added back to the entire cost of the asset. So what happened? Here, the price of the new component 80 should be included to the cost of the asset and 30 should be deducted from the carrying amount of the asset. Then there are repairs and maintenance expenses in 2020 itself. In 2020, we have incurred the further expenses of 70 crores. But because of this 70 crores, the capacity is increased by 10%. So we should add it to the cost of the asset. Means we should capitalize it. So that's why we have included 70 crores. But one more element here, what happened? Is there any special useful life for this 70 crores? No, they haven't mentioned anything. What is the separate useful for this repairs and maintenance? That's why it should be added to the entire opening carrying amount of the asset. So in this, what is the main component value? 4370. What is the additional value? 75. Because additional value is not changing, 75. But main component is changing. To the main component, I should be added 70 crores. So 4370. And second thing, carrying amount of the old component and the price of the new component. So what is the net component we have included? 50. And is there any separate life, is there any separate useful life this worn out wing? No, they haven't mentioned anything. So that's why I assumed it has the same useful life as aircraft. So it should be added directly. So it's coming 4495. Again the main component becomes 4420. How? 4370 plus 80 minus 30. So 4420. Then additional it remains as a 75. Then I should provide the depreciation for the 2020. How to provide the depreciation? For the main component, what is the residual value? 300. What is the residual value? 300. 4420 opening carrying value minus residual value divided by remaining expected useful life. With respect to 2019, what is the remaining expected useful life? 11. So already 1 year expired. So what is the remaining? 10. Then this is main component. Then what about additional component? So remaining opening carrying amount 75 minus 0 divided by remaining 3. So it is 25. Then what is the total depreciation for 2020? 412 plus 25, 437. Okay. So this is the total depreciation for 2020. So 4495 minus depreciation for 2020, then I got the 4058. So this is the closing carrying amount as on 31st 12 2020. So let's see what is the journal entry. So cash account debit to loss on sale of old components. It's not like that. Wait. It's just for your understanding purpose. So from this, the entire problem is completed, because what they're asking, just they're asking, so find out the amount to be recognized and expenses or asset in 1920. So all these expenses whatever incurred in 1920 should be added to the cost of the asset. Okay, then they're asking the what are the carrying values in 19 and 20. What is the carrying value in 19? 4375. What is the closing carrying value in 20? 4058. Sir, why you are writing this journal entry? Just for CC. CC means conceptual clarity. So old component is there, right? So it should be derecognized from the books of accounts. Means it's simply saying the aircraft value, the carrying amount of the aircraft should be reduced by 30 crores. So I made 30. And what happened here? Cash account debit 12 crores and loss on sale of component 18 crores. And this loss should be transferred to P&L account. How you got this 12 lakhs? Okay. 30 crores minus 12 crores. Capitalized means they have sold that asset. They got the 12 crores. I am just providing the journal entry for this component also, only for the understanding purpose. There is no need to write it, note down that journal entry in the exam. Only for your understanding purpose, I just noted down. Okay. Then, what is the next aspect? Question number 5. X Limited purchased a machine at a price of 200 lakhs and it paid a freight of 40 and installation cost 80 and IGST paid at 18%. And the share of general overhead ascertained for the trial run of the machine is 30 lakhs. And the labor cost and direct expenses for the trial run is 60 and the machine has been put to use on 1419. So the estimated dismantling cost of the machine at the end of the useful life of the 10 years is 400 lakhs and the discounting rate to be applied is 5%. So already they have given the present value of the estimated dismantling cost 246 lakhs. And the machine requires major overhauling for every 2 years at a cost of 26 lakhs. The pass the journal entries and accounting treatment for the financial year 19, 20 and 2021. Okay. Let's see what is the cost of the asset. So tell me what is the cost of the asset. So the cost of the asset, the purchase price and the freight, it's a directly attributable expenses. Installation cost, it is also directly attributable expenses. Okay. Then share of the general overhead ascertained for the trial run of the machine is 30 lakhs. So whether this expenses should be included in the cost of the asset or not. Share of general overhead ascertained for the trial run of the machine is 30 lakhs. Whether this expenses should be included to the cost of the asset or not. Tell me, Purna. Exactly. So you are not focusing on the word just a trial run. So yeah, trial run expenses are incurred. What kind of expenses? It's a share of general overhead. So overhead means it's a indirect expenses. Okay. Already we have in theory itself, in the concept book itself, we have specifically noted down the following costs are excluded from the cost of the asset. In that we have mentioned the general overhead. Apart from that also, what is the definition? All directly attributable cost only added to the cost of the asset. But this is indirect. Overhead means indirect. That's why we should not take it into consideration for the calculation of the cost of the asset. It should be transferred to P&L. Then the labor cost and direct expenses for the trial run is 60. So with respect to the trial run, the labor cost and direct expenses we can be included. Okay. Say trial run direct expenses. And this 30 lakhs is trial run indirect expenses. We should not include indirect expenses to the cost of the asset. Now tell me the what is the total cost? 1200 lakhs plus 40 plus 80 plus 60. Ignore 30 lakhs. Now what is the total cost of the asset? 1380. Then here one more thing. What is the present value of the estimated dismantling cost? This is the third element. Should be added to the 1380 to 46. Total how much? 1626. So this is an easy aspect till now. Then the new concept is arising here. The mission requires major overhauling for every 2 years at a cost of 26 lakhs. In a previous example also, what happened there? Overhauling expenses are there, but initially we are not differentiating, we are not providing any different separate depreciation entries for the overhauling and the remaining asset. But here we need to provide separate depreciation entry from the beginning of the year. Sir, why you are not providing depreciation in the question number 4 separately? Because in that, at the date of the purchase of the asset, we don't know how much the cost incurred for the overhauling expenses. So that's why I provided the depreciation. That's why I provided the depreciation for the entire asset. So without any differentiating here, without any differentiation of main element and additional element. But here, at the beginning of the itself, they are given the information at a cost of 26 lakhs. But in the previous problem, yeah, the cost is given only in 2019. But in 2015, only they are given, it require major expenses. But what is the portion of the major expenses? I don't know in 2015, right? So I just know about this only in 2019. So from that date onwards, I can provide the depreciation separately. But here I know from the beginning of the year. So out of 1626, what is the overhauling cost? 26. What is the overhauling cost? 26. This assumed this 26 lakhs included in 1626. So assumed this 26 lakhs included in cost of PPE. Okay. So, but this 26 lakhs, what is the useful life? 2 years. For the remaining 1600 lakhs, what is the useful life? Tell me. The useful life of the machine is 10 years. Okay. The useful life of the machine is 10 years. So with respect to 1600 lakhs, the useful life is 10 years. With respect to 26 lakhs, the useful life is 2 years. So that's why I need to provide depreciation separately. So how to provide the depreciation? 1600 lakhs. What is the residual value? 0 divided by 10. So 160 lakhs. This is main element. For the respect to additional element, 26 lakhs. What is the residual value? Again it is 0. So the useful life 3. So 160 plus 13 lakhs equal to 173. So this is the depreciation per annum. So what is the opening carrying amount? 1626. So 1626 minus 173 annual depreciation. What is the closing carrying amount? 1626 minus 173. How much? 1453. So this is the closing carrying amount of the asset in 2020. Okay. So on 31st 3 2020. Again they are asking the journal entry for 2021. Again I should pass the journal entry for 2021 also. So they are asking the journal entries, but they are not given in our question. So let's find out this one. So let's provide the journal entries. They are not given in the question itself. So based on the calculation, we can provide the journal entries. Journal entries. What is the question number? Question number 5. Journal entries. So 1/1/2019. On this date, we have purchased the asset, right? Now, tell me what is the total cost of the asset? Sorry. So what is the total cost of the asset? 1626. The asset should be recognized at 1626. So whether it is a machinery, purchase a mission. Okay, super. So mission account, debit. So amount in debit in rupees, credit in rupees. Debit in rupees, credit in rupees. So machinery account, what is the machinery account? 1626. But out of this 1626, did I pay everything in the cash? No. So I paid everything in the cash. Purchase price cash, freight cash, installation cash. IGST not considered here, leave it. Because IGST is refundable taxes. General overhead also transferred to P&L, labor and 60. So all these are cash. Only 246 is not paid in cash today. It's a liability for dismantling cost. 246. So to cash account, to liability for dismantling cost. How much? 1380 cash. Remaining 246. Okay. This is the liability for dismantling cost. Okay. What are the expenses incurred? Because of that, we haven't incurred cash flows today. So we are going to incur cash flows in future also. The present value of the future cash flows also added to the cost of the asset. So I am forwarding the journal entries. Today cash flows is 1380. So with respect to the future dismantling cost, if I wanted to incur today, I should pay 246 lakhs. But I haven't paid 246 lakhs today, so that's why I recognized it as an outstanding liability. Liability for dismantling cost. During 1920, so what is the journal entry for the depreciation? Depreciation account debit to machinery account. Depreciation account debit to machinery account. What is the depreciation value? So we already calculated. The depreciation value is 173. So 173 account debit to 170. Whether rupees in lakhs? Yeah. So you should mention rupees in lakhs. So otherwise your entire answer is going to be wrong. Then, so is there any other journal entry? Tell me. Is there any other journal entry apart from the depreciation? Of course, depreciation should be transferred to P&L. That is also there. So if you want, you can write those also. P&L account debit to depreciation 173 and 173. No. What is the next journal entry? I have recorded this as a liability, right? So I should provide the discounting every year. So at the end of the second year, it becomes the, okay, at the end of the second year, I am going to settle this with the cash flows. So the cash flows are incurred in the future. So now I should increase this liability by giving the discounting factor. So interest account debit to interest account. What is the interest amount? So let's see. So what is the discounting factor? 5%. Apply that 5% on 173. Sorry, 246. 246 into 5 percentage. 246 into 12.3. Interest account debit to liability for dismantling cost. 12.3. Okay. Next. With respect to, so this interest should be transferred to P&L again. P&L account debit to interest account, how much? 12.3, 12.3. Then what is the next aspect? With respect to 2021. Then again tell me the journal entries with respect to 2021. So I should provide the depreciation entry again, right? So let's see. Depreciation account debit to depreciation account debit to machinery account. But I don't know what is the depreciation for 2021. So for this I need to find out what is the opening carrying amount. Opening carrying amount equal to, already we have recognized asset at 1626. So out of 1626 the depreciation is 173. So the opening carrying amount is 1453. So out of this entire 1453, so what is the opening carrying amount with respect to main component, additional component? 1440 553. Sorry, sir, 53. No, okay, 13. Okay, 13 is the additional component carrying value. So I need to provide the depreciation differently for both main component and additional component. Depreciation for the main component 1440. What is the residual value? The residual value is 0. So divided by, what is the expected useful life? Here last year it is 10. 1 year expired it is 9. So with respect to the additional, what is the opening carrying value? 13 minus 0. So out of 2 years, already 1 year is expired. So the remaining expected life, useful life 13. So 1 year it is 13. Then 1440 divided by 9. Sorry? Okay, divided by 9. 160. 1440, right? Divided by 9 years. Okay. So what is the total depreciation here? 173. Again it is 173. So I need to provide the depreciation for 173 and 173. And what is the next journal entry? Interest account debit to again I should increase the dismantling cost. Liability for dismantling cost. What is the interest value? So I need to find it out. What is the opening carrying amount of the dismantling cost? Initially recognized at 246. Again I have increased by providing of the interest last year how much? 12.3. So on this amount, I should provide the interest rate percentage of 5%. 246 plus 12.3 into 5%. How much? 12.92. So 12.92. So these are the journal entry for the interest account debit to journal entry for the providing of the interest in the year 2021. So now I should transfer these expenses to the P&L. So depreciation account, P&L account debit to depreciation account debit to interest account. What is the depreciation here? 173. What is the interest amount? 12.92. So 173 plus 12.92. So 185.92. Okay. So this is the journal entries I should be provided. But in our answer, they have the they are given only the calculations, they are not providing the journal entries. So that's why I provided in this our notebook. Question number 6. Okay. So Alpha Limited has a machinery at a cost of 4,800 and the provision for depreciation is 1,600 as on 1/4/18. So on that date, the remaining life of the machine is 6 years with the residual value of 800 rupees. So on the same date, one component of the machine is replaced. The price of the new component is 600. So what I am going to do now? This 600 should be added to the cost of the asset. And the cost of the old component is 500 with the accumulated depreciation of 200. So 500 minus 200. So entire 300 should be excluded from the net cost of the asset or net carrying amount of the asset. Here which method they are following? For the providing of the depreciation there are two methods. They are following the revaluation. I am not talking about the model. For the providing of the depreciation generally, so there are two approaches. For providing of depreciation, two approaches. Okay. So what we are going to do? So every time asset should be shown at cost only. First thing, all the time asset should be shown at cost. Here asset should be shown at cost minus accumulated depreciation. Okay. So if you are following the approach 1, what happens is, so asset should be reduced by every year. So every year the asset is reduced, the asset side is reducing every year. But if it is approach 2, what you are going to do, the asset should be shown at same value, but every year you have created the accumulated depreciation. It's a liability, this liability should be increased. So generally the concept is as per the matching concept. So increase in asset equal to decrease in liability, or decrease in asset equal to increase in liability. So in the first approach I am following the decrease in asset. In the second approach they are following the increase in liability. Both are same. So let's say I am just providing the normal journal entries. So I have purchased one asset for 500 lakhs. So I have purchased one asset for 500 lakhs. In approach 2 also I have purchased for 500 lakhs. So after 1 year, so I should provide the depreciation, right? So what is the depreciation? So let's say 5 years is the, let's say 5 years is the useful life, 100 lakhs. Here also 100 lakhs is the depreciation. But what I am going to do in the first approach, the journal entry is, so I am following decrease of asset, right? depreciation account debit to asset account. So asset is reduced by 100 lakhs. So the asset is shown in the balance sheet. The asset is shown in the balance sheet at net carrying amount. Okay. What is the net carrying amount? 400 lakhs. But coming to this approach, the journal entry is depreciation account debit to accumulated depreciation. So this accumulated depreciation is called liability. Treat it as a liability. So instead of decreasing one asset, so you have created one liability and you are increasing it. 100 lakhs, 100 lakhs. So in balance sheet, the asset is shown at gross carrying amount, that is 500 lakhs. And accumulated depreciation, it is 100 lakhs. Accumulated depreciation as a liability, I should shown as 100 lakhs. So instead of writing 400 lakhs on the asset side, I am writing it as a 500 lakhs on asset side, 100 lakhs on liability side. So in our current problem, they are following this approach. So that's why we are facing some difficulty. Okay. Sorry? Make a? For these two methods. Yeah, there are differences. Because here what happened is, first I will give you the format. I'm going to give the standard format for the solving of the problems with respect to how to find out the closing carrying amount of the asset for every year. Okay. So with respect to the entire 1 year, what are the changes that are going to be made to the PPE, I will give you. And after this, I will continue this with this problem, because with that format only I am going to solve this problem. Standard format for calculation of carrying amount of PPE. Okay. First thing, opening carrying amount okay, before revaluation. Opening carrying amount before revaluation, and after that I should provide the revaluation gain or revaluation loss. So plus or minus revaluation adjustment. Should provide revaluation adjustments. In all our problems, the revaluation gain was the revaluation gain only there. Okay. So forget about the revaluation loss generally. So what is the revaluation gain? I should be added to the opening carrying amount. Then I got opening carrying amount after revaluation. Opening carrying amount after revaluation minus, then I should provide the depreciation. So what is the depreciation? The formula for the depreciation under SLM method is opening carrying amount. So opening carrying amount after revaluation minus residual value divided by remaining expected useful life. remaining expected useful life. So opening carrying amount after revaluation minus depreciation, then I got closing carrying amount. So closing carrying amount before impairment. So there is a separate chapter called impairment of asset, and we will have a detailed discussion on the impairment. So just the impairment means reduction in the value of the asset. So what we are going to do, so I am going to compare closing carrying amount before impairment with the recoverable amount. Then I should provide the impairment loss. So what is the impairment loss here? Impairment loss. How to calculate the impairment loss? Recoverable amount minus closing carrying amount before impairment. If you follow this format, that's enough. You can get the answer. Okay. Then you got closing carrying amount after impairment. Okay, this is the closing carrying amount after impairment. So should be noted down 2 note points. Note 1. Revaluation always done at the beginning of the year. Revaluation should be made at the beginning of year. Okay. Second note. Impairment loss should be provided. The impairment should be provided at the end of the year. So why I am writing these 2 note points? It's a beginning and its end. Sometimes in question itself, so I'm just giving some examples how they're asking the question. You no need to write the example. So the revaluation is made on 31st March 2020. So the revaluation made on 31st 3 2020, and the fair value is 30 lakhs. It means you are not supposed to do it on 31st 3 2020, because in our format, when I need to provide the revaluation at the opening of the year, so they provide the information on 31st 3 2020. It means you should provide the revaluation on 1/4 2020. Both are same, right? So what is our note point? Revaluation should be made at the beginning of the year. Then second one. On 1/4/21, the revaluation the impairment loss equal to 20 lakhs. This impairment loss should be provided always at the closing of the year. So it means even though the information is given on 1/4/2021, it means they have given the information on 31st 3 2021. Okay. So that's why you should note it down these note points. So this is the format for which approach? I already told you there are 2 approaches, right? So this is for approach 1. For the providing of the depreciation, there are 2 approaches, right? So for the approach 1, this is the format. So we can solve we can calculate the closing carrying of all the assets with this format, that's enough. But with respect to the second format, we cannot do this because the gross carrying amounts are different. Okay, and the revaluation adjustment should be made between the, should be classified between the gross carrying amount and opening carrying amounts. So here we are following the approach of net carrying amounts. All these are net carrying amounts. Okay, so we will discuss the approach to format like gross carrying amounts. The assets are always shown at gross carrying amount in the balance sheet. For this approach, how to follow? So for all assets, I need to provide the revaluation and impairment adjustments, right? So how to make the treatment for this approach to, and what is the format for the approach to? We will see after the break, okay? Break, take 15 minutes. So let's restart our session. So let's see approach 2 with an question number of 6. So first we will see the question. So Alpha Limited purchased machinery at a cost of 4,800. So this is a gross carrying amount. So out of this, what is the accumulated depreciation? 1600. So this is the value of the asset as on 1418. So on that date, the remaining life of the machine is 6 years with a residual value of 800. What is the remaining expected residual value? 800. And what is the remaining expected useful life? 6 years. Then on the same date, one component of the machine is replaced. Puna, remind me something after the class. Okay. So on the same date, one component of the machine is replaced. So the price of the new component is 600. So this is the cost. The gross carrying cost and net carrying cost is the same because there is no depreciation on 600, right? Because we have purchased on the today itself. So in our example also, so this is the net carrying cost, net carrying amount. This is the gross carrying amount. Both are the same because the depreciation is 0. Okay, in the same way, so on the date of the purchase, the gross carrying amount, net carrying amount is the 0 because the accumulated depreciation is 0. Then the cost of the whole component is 500. This is the gross carrying amount. And the accumulated depreciation is 200. Then the supplier of the new component took the old component at fair value 360. What is the fair value of the old component? 360. Okay. What is the net carrying amount of the old component? 300 because 500 is the gross carrying amount and accumulated depreciation is a 200. So net carrying amount is 300. So the net carrying amount is 300. The fair value of the old component is 360. Then what happened? On 31st 319, the machine is revalued as per the company policy at 5,000 rupees. So on 31st 319, the impairment loss of 900 has been recognized for the machine. So what is the information they are given? So on 31st 319, the machine is revalued as per the company policy at 5,000. What does it mean? The machine is revalued to 5,000. So I need to provide the revaluation gain or revaluation loss, but the revaluation made on 31st 3 2019. Am I need to do the revaluation at the end of the year? No. My question is whether am I need to do the revaluation at the end of the year? So no, always I need to do the revaluation at the beginning of the year. 31st 319 means it means 1/4/2019. Then on 31st 320, impairment loss of 900 has been recognized for the mission. So on 31st 320, impairment loss of 900 has been recognized as a mission. So always impairment loss should be provided at the end of the year. So 31st 320. Then I should pass the journal entries and show the accounting treatment made in the financial statements for the year ended 31st 319, 20 and 21. And depreciation to be charged on straight line method. So depreciation would be charged on the straight line method. Let's see question number 6. After? Okay. Wait, I will give you the answer. Sorry, slide is not changing. Wait. Hmm. Okay. Hmm. Where is India 16? Sorry. Number? So sixth answer. Okay, okay. This slide is related to you, right? So we already. Okay. But here I am providing the simple solution only. For your understanding purpose, I am providing the simple solution. But I wanted to give you the complete approach. 1 minute. Answer. 2645 is sixth question answer. Wait 1 minute. Please wait for some time. Yeah, we got it. No. Okay. I will show you the answer. So currently let's see the simple answer. So India is 16. So this one, right? No, okay, okay, this one. So what is the opening carrying amount here? 3,500. Sorry. What is the opening carrying amount? 4,800 minus 1,600. 3,500. So minus, is this right? Okay. In the open E slide, no? This slide. Not this one. Okay. 1 minute, please. So where is it? Hmm. This one? No. 1 minute. 1 minute, yeah. ఇక్కడ వాట్సాప్లో అక్కడ కాక డిఫరెంట్ ఆన్సర్ ఇస్ దేర్. సరే. చూడాలి. ఓకే. So question number, 1 minute. Okay, let's solve the question number 6. So what is the opening carrying amount? So I will give you the format here. Question number 6. So I need opening carrying amount. Okay. Before revaluation. Opening carrying amount before revaluation. That is the format, right? So opening carrying amount before revaluation. But here I am following the net carrying amount approach. Here I am following the gross carrying amount approach. So opening carrying amount means here particulars. After that I need to provide gross carrying amount and accumulated depreciation, and then I got the gross carrying amount, then accumulated depreciation, then I got the net carrying amount. So let's see the calculation. So what is opening carrying amount on 1/4/18? So it starts from 1/4/18, right? So 4,800. So 4,800, 1,600. So opening carrying amount minus accumulated depreciation, 3,000 net carrying amount. So gross carrying amount minus accumulated depreciation, I will got the net carrying amount. Then what happened in 1/4/18 or 18/19? So some related elements are happened. So on that date, the remaining useful life, that is also fine. On the same date, the one component of the machine is replaced. So the price of the new component is 600. So I should include this new component to the cost of the asset plus new component. Here tell me the rupees in lakhs or thousands? Only rupees. Okay. Rupees. What is the new component value? 600. So this is the gross carrying amount. What is the accumulated depreciation? We have purchased today, right? So there is no accumulated depreciation, 600. Then what is the old component? So the carrying amount of the gross carrying amount is 500 and the accumulated depreciation is 200. This should be derecognized from my books. Minus 500. Sorry. Write it as 500, 200. Then I got 300. This should be deducted from the end. Okay. Of course, this 500 also should be deducted from the gross carrying amount. This 200 should be deducted from the accumulated depreciation because the asset is going out, right? The liability with respect to the asset is also should be derecognized from the asset. Derecognized from the balance sheet. Then what happened on 1418? Is there any other element? No. So I made all the everything is one, and the supplier of the new component took the old component at fair value 360. That's fine. It relates to the fair value on gain. Then what happened? Now I should calculate the 31st 319. For this I need to provide the follow the format. What is the format? Opening carrying amount I got. So all these are the opening carrying amount before the revaluation. So what is the opening carrying amount after adjustments? Opening carrying amount after adjustments before revaluation. So tell me the answer. 3,500. Oh, net carrying amount is 3,500. Okay. Then what is the gross carrying amount? 4,800 plus 600 minus 500. 4,900. 1,400. So 4,900 minus 1,400. 3,500. So this is the opening carrying amount after adjustments. Is there any revaluation adjustments during 1819? Revaluation 1819. There is no revaluation during 1819. So 0, 0, 0. Then I got opening carrying amount. Opening carrying amount after revaluation also same. Okay, 4,900, 1,400, 3,500. And what is the next aspect? As per our format, should provide the depreciation. So minus depreciation. Depreciation should be calculated on which amount? Gross carrying amount or net carrying amount? Always depreciation should be calculated on net carrying amount. Depreciation on net carrying amount. So for that I need to take in the opening net carrying amount. Okay. So for the calculation of the depreciation, okay, the depreciation always calculated on net carrying amount. What is the net carrying amount opening? 3,500 minus what is the residual value? 800 divided by expected useful life 6 years. 450. So this is the depreciation on net carrying amount. Sorry. So it should be added to the accumulated depreciation. So what is the journal entry we have provided for this? Accumulated what is the journal entry? Depreciation account debit to accumulated depreciation. It means it should be transferred to accumulated depreciation. Accumulated depreciation should be increased. It means should be added to the accumulated depreciation. So depreciation 450 should be added to accumulated depreciation. There is no gross. It will affect how much? Okay. $450. Then what is my gross carrying amount? So opening carrying amount. It's not opening carrying amount, it's closing carrying amount. So closing carrying amount. Is there any impairment during 1819? No. The impairment is on 31st 320. But revaluation on 31st 319. It's not meant by 31st 319. It's 1419. Because the revaluation always provides on opening amounts. Here I got the closing carrying amount. So closing carrying amount, what is the closing carrying amount? 4,900 is the gross carrying closing amount. What is the accumulated depreciation? 1,400 plus 450. 1,850. So 3,000 minus 450. 3,050. Okay. So this is the closing carrying amount as on 31st March 2019. So 31st March 2019. So this is the closing carrying amount for 1819 and it becomes the opening carrying amount for 1/4/2019. Let's see. Let's start from opening carrying amount. So until this, it's an easy concept. Okay. There is no there is no complications. And coming to opening carrying amount 1419, 4900, 1850, then becomes 3050 is the net carrying amount. For this, what is the adjustment I need to do? Revaluation gain. What is the revaluation amount? The revalued amount is 5000. So the asset should be increased to 5000 rupees. So what is the revaluation gain? Revaluation gain, working note number 1. Okay. Working note number 1, revaluation gain. Now tell me, what is the fair value? The fair value minus carrying amount, I got revaluation gain. 5000 minus 3050. Should always use net carrying amount, okay? Should always use net carrying amount. So what is the fair value gain? 1950. Okay. So this 1950 should be increased. And what I am going to do now? So it should be added to 1950. Then it becomes 5000. So this is an easy. So if you're following the net approach, it is easy. Then what about how should allocate this revaluation gain? How should you allocate this revaluation gain between gross carrying amount and accumulated depreciation? Got it? Because this amount should be, I should fill up these two columns, right? What amount I should be supposed to fill it over here? So here I am following approach 2, that is complete elimination approach of accumulated depreciation. First I need to use the entire accumulated depreciation. So what is the accumulated depreciation? 18. So what is the accumulated depreciation? 1850. How much balance there in accumulated depreciation? 1850. First use that amount. Okay. So 1850. Next. What is the remaining balance here? The balancing figure is 100. Okay. This revaluation gain should be allocated between gross carrying amount and accumulated depreciation. So the approach is elimination of the accumulated depreciation. There are two approaches. So if you know, sir, I don't want to follow this, there is another approach also. This 1950 should be allocated between, okay, gross carrying amount and net carrying amount, accumulated depreciation in their carrying amounts. So here 1950 revaluation gain is with respect to 3050 net carrying amount. Then for 3050 it is 1950. Then what is for 4900, how much it is? Okay. And for 1850, how much it is? So it is the first approach actually, but in our problem we are not following this approach. We are following complete elimination of accumulated depreciation approach. So for understanding purpose, I just give a glimpse, but leave it. You can follow either of the model, but in our problem we are following this model. So I should give 100 rupees over here. So revaluation gain, and here 1850. Now tell me the journal entry, then only you can get the better clarity. So the asset should be increased by how much? The asset should be increased by asset account debit 1950. So instead of that, gross carrying amount of the asset, how much? 100 rupees. Gross carrying amount of the asset increased by 100. Then accumulated depreciation, it should be decreased, right? Because I am using it, there is a gain. So because of this gain, I am using 1850. So accumulated depreciation account 1850. Then I got the revaluation gain to revaluation gain. Of course, the revaluation gain should be transferred to OCA. Okay. Revaluation gain means OCA. How this 1950 is allocated between the gross carrying amount and accumulated depreciation? First, you should use the entire accumulated depreciation. It means accumulated depreciation is a liability, so it is a credit figure. But I am doing it debit, so reduce. But gross carrying amount of the asset is a debit aspect. I am giving debit aspect again. So the gross carrying amount of asset should be increased by 100. Okay. 1950. Then what is the opening carrying amount after revaluation? What is the opening carrying amount after revaluation? 4800. Then what is the accumulated depreciation? Sorry. Now opening carrying amount after revaluation. Tell me the opening carrying amount. Purna. 5000. Okay. Then what is the accumulated depreciation? 0. Okay. It's not provision. Accumulated depreciation is a liability here. Yeah. Already you have the accumulated depreciation balance of 1850. Okay. Now I wanted to reduce it. Okay. So that's why debiting it. Debiting means I should reduce the accumulated depreciation. Then opening carrying amount after revaluation. Then I should provide the depreciation. The depreciation is always provided on net carrying amount. Now tell me what is the net carrying amount? 5000. What is the depreciation? Then is there any changes in the residual value or carrying amounts as on 31st 3/19 or 1/4/19? There is no changes, right? With respect to useful life and with respect to residual value. So 5000 minus 800. So how many years are remaining? Already here it is 6. Now 1 year is expiring. Remaining expected useful life is 5. Tell me the depreciation. Purna, what is the depreciation? 840. Okay. So this 840 should be included here. Sorry. So 840, right? Then. So depreciation is provided. 840 should be reduced. Then I got the closing carrying amount. No. Closing carrying amount, no need to write after revaluation. So closing carrying amount before impairment loss. Okay. Closing carrying amount before impairment loss. Because that is the format I am using here. So closing carrying amount before the impairment. Now I got the closing carrying amount. What is the gross carrying amount? 5000. So 840 is the depreciation. 4000. 160 is the net carrying amount. Then I should provide the impairment loss. Because I am standing on 31st 3/20. So on 31st 3/20, the impairment loss 900. Minus impairment loss. This 900 should be deducted from here. Net carrying amount. Minus. Then I got how to allocate this impairment loss to the gross carrying amount and accumulated depreciation again. Working note number 2. Impairment loss. Impairment of the loss 900. So this loss should be allocated between gross carrying amount and accumulated depreciation. But what approach we are following? We are following the approach of elimination of the accumulated depreciation. What is the balance in the accumulated depreciation? 840. So first this 840 should be eliminated. So 840 for accumulated depreciation and remaining amount. What is the balancing figure? So this 60 should be eliminated from gross carrying amount. 60 gross carrying amount. Now please tell me the journal entry. Only after the providing of the journal entry you can get the clarity whether we should deduct it or we should add it. So it's an impairment loss, right? So impairment loss account debit 900 to gross carrying amount how much? It is 60. And what is the accumulated depreciation? 840. Whether accumulated depreciation is increasing or decreasing here? Observe it. Whether accumulated depreciation or so accumulated depreciation is I am giving crediting. So I need to increase the accumulated depreciation by 840 again. Okay. Then remaining balance should be deducted from 5000. Okay. Then I got the closing carrying amount. After impairment loss. 5000 minus 60, how much? 4940. What is the accumulated depreciation? Sorry? 1680. Super. And the balancing figure is 4940 minus 1680 equal to 3260. Okay. Or 4160 minus 900. 3260 is the closing carrying amount after the impairment loss. Tell me the date please. 31st 3 2020. Okay. So now what is the questions I asked? I asked about what is the okay carrying amounts on 31st 3 19 20 21. Okay, I need to provide for 21 also. But with respect to the 21 there is no revaluations or there is no impairment loss. So I should provide the depreciation. Then minus depreciation for 2021. Now tell me the depreciation. 3260 minus how much? 800. 4 years. This is the remaining expected useful life. 615. Okay. 615. Then on closing carrying amount as on 31st 3 2021 4940. So what is the total accumulated depreciation? 1680 plus 615 2295. So here also 615. Sorry, how much? 2645. Okay. Now I should provide these are the journal entries. So but these are the rough journal entries. So I need to provide the journal entries for the depreciation and impairment loss and revaluation gain. Okay. And one more thing, I am not purchasing this asset on 1418. These are the carrying amounts on 1418. And what happened? So the old component is replaced also. The new component is included. For all this adjustment, I should provide the journal entries. So let's see whether what is the answer here. The depreciation for 2021, 61. What is the closing carrying amount? 3260. And here 2650, 3260, then 3050. Okay. Now I should provide the journal entries. Please provide me the journal entries. So first journal entry, what happened here? Here I have purchased new component for 600 and it should be de-recognize the old component also. Okay. So what is the nature of asset here? Here machinery. So machinery account debit to 600. Old component 300. No, new component price is 600. So machinery account debit to cash account, because cash might be the cash outflow, right? Okay, sorry. Cash is the outflow. Next, this is for new component. It should be included to the cost of the asset. That is the calculation. This is the journal entry to represent that calculation. The machinery account debit to cash. Then, okay, deducting of old component. How to deduct the old component? It should be decrease the value of the machinery. So what is the carrying value of the old component? Sorry, 300. Fair value 360. Okay. Okay, profit 60. So machinery should be reduced by 2 machinery 300. Then to profit on sale 60. So what is the fair value of the machinery? 360. So cash account debit to, okay, so assumed it is 360. Okay, this is the thing happened actually. But here, what happened? On the same day, one component of the machinery is replaced. The price of the new component is 600. The cost of the old component is 500 minus 200. The supplier of the new component took the new component at the old component at fair value of 360. Here, I am not selling it. I am just exchanging it for the new component. So, what I am going to do? So, it's not coming the cash. It's not coming in the form of cash. So, out of 600, okay. So, this is for understanding purpose only. This journal entry is for CC. This journal entry for CC. CC means conceptual clarity. So, but here the exchange, the new asset is purchased by exchange of the new, by exchange of the old machinery. So let's go to back. So what is the journal entry here? I should record the machinery at cost. So what is the machinery cost? Machinery account 600. So out of 600, how much we paid through the cash? So how much out of 600? So I given old component, right? So old component he valued at 360. So the balance amount is paid through cash, 240. So to cash account 240. So the remaining 360, okay, to machinery. The old component of the machinery is 300, and the profit on machinery, profit on old component 60. So here what happened? Machinery is increasing with 600 and machinery is decreased by 300. Right? In debit there is a 600, in credit there is a 300. Instead of that, I can write it as 300 and I should reduce this amount. Then you can get this journal entry. Maybe in question, in our answer, this journal entry may be reflecting over there. Machinery account debit to, cash account debit to, profit on old account. Of course, generally they are providing the journal entry by taking into consideration of accumulated depreciations also. Okay. Now, how this 300 is coming? No? Okay. How this 300 is coming? After 600 minus 300, right? So let it be. We can provide this journal entry, that's enough. No need to make it too complicated. So machinery account debit to, cash account debit to, profit on old component. So no sir, we want the exact journal entry. We should provide the accumulated depreciation also. So we should provide the accumulated depreciation also. We should de-recognize the accumulated depreciation also. So then what is the next journal entry? Depreciation accounting. So one element is completed. So I should provide the journal entry for the depreciation during 1819. What is the journal entry for the 1819? 450. Depreciation account debit to accumulated depreciation. So depreciation account debit to accumulated depreciation. 450. And next year, this is depreciation for 1819. Next depreciation for 1920. Before depreciation, there is an revaluation gain. So I should provide the journal entry for the revaluation gain. So the revaluation gain should be transferred to OCA account. So the machinery account. So now the machinery is shown at gross carrying amount, right? What is the gross carrying amount? The machinery account and accumulated depreciation account debit to OCA, because this is a revaluation gain. What is the revaluation gain? 1950. This 1950 should be classified to 100 and 1850 to gross carrying amount accumulated depreciation. So the machinery account 100. What is the accumulated depreciation here? 1850. So 1850 to 1950. So this is with respect to 1920. Then what is the depreciation entry for 1920? Depreciation account debit to accumulated depreciation 840. Okay, this is also 1920. Then is there any impairment loss during 1920? Yes. So impairment loss, generally impairment loss, what going to do? What we are going to do? It's okay. So I'm passing the different journal entries, like I'm providing the detailed journal entry. Impairment loss account. What is the impairment loss? 900 to machinery account. So here I can directly write it as a machinery, because always machinery are shown at gross carrying amount. So for the first journal entry, I am considering the net carrying amount. Okay, I will provide you a journal entry with the usage of the gross carrying amount also. So first listen to this. So what is the gross carrying amount? 60. Then to accumulated depreciation 840. Okay. Now this impairment loss should be transferred. What is the journal entry? So and generally impairment loss should be transferred to P&L, provided if there is no revaluation gain previously. But there is a revaluation gain, right? What is the revaluation gain? How much balance there is? 1850. So it is a gain. I need to check whether it is a subsequent gain or it's a first time revaluation loss or not. No, it's not a first time revaluation loss, because already in previous year, okay, in the current year only, there is a revaluation gain of 1950. So first the loss should be set off against revaluation. The loss should be set off against OCA, and the remaining should be transferred to P&L. What is the loss here? 900. So it should be set off against OCA. OCA account debit to 900 to, okay, impairment loss 900. Did you understand? Generally impairment loss should be transferred to the P&L. So P&L account debit to impairment loss. That is the journal entry. But here there is a balance in OCA. So the impairment loss should be set off against OCA balance, and the remaining balance should be transferred to P&L. Done. So all these are related to 1920. This is also 1920. Then with respect to 2021, what is the journal entry? Only depreciation journal entry. Tell me the depreciation journal entry. No, you cannot do that, because here the balance is there in OCA. So I need to reduce the OCA balance. Okay. So here what you are saying, I got the loss, right? So here, okay, if you incur the loss, don't show the entire impact on P&L because you already recognized gain, right, previous yearly. So first de-recognize that gain. Then the balancing amount should be set off against the P&L. Here the entire gain is set off against the OCI because the OCI has the huge balance. Okay. With respect to 2021, what is the journal entry? Depreciation account debit to accumulated depreciation. What is the amount? 615. So this is the accumulated depreciation journal entry. Wait, I told you, right? So I wanted to provide the journal entry with the gross carrying amount with respect to first journal entry also. So what happened here? The machinery, sorry. Okay. The machinery is de-recognizing, right? So what is the value of the machinery? It is de-recognizing, or what is the value of the machinery? It is including. So I am giving the journal entry with respect to the first one. So provided net carrying amount basis. If you want gross carrying amount journal entry, I am giving it. Gross carrying amount. Okay. Looking at the calculation part, what happened? Here the new component, the gross carrying amount of 600 is including. So I can write it as a machinery. And the gross carrying amount of 500 should be, deducted from the books of the accounts. So what is the net carrying amount I should be added? Actually it is 100 only. So first should decrease the 600, should increase the 600 first. So machinery account. What is the value? 600. Okay. Then I should decrease the one machinery is de-recognizing, right? What is the gross carrying amount? I'm not talking about the net carrying amount, gross carrying amount. 500. So I should be de-recognize this 500 and I should be de-recognize the accumulated depreciation with respect to this 500, right? So what is the accumulated depreciation with respect to this 500? 200. So how should I de-recognize the accumulated depreciation? By debiting or crediting? Accumulated depreciation is a credit. If I want to de-recognize it, should make a debit. So accumulated depreciation account 200. Then what is the effect here? 500 minus 200, then it becomes the 300. Then did you paying any cash? Are you paying any cash for acquiring of this 600? Two 40. So how we got this 240? 600 minus 360, right? Because we are valuing the old component at 360 rupees. So then already the old component is de-recognized. So how much net carrying amount is de-recognized from books? 500 minus 200, 300. So remaining 60 is the profit on transfer of machinery. Profit on transfer of machinery. How much? 60. So here in machinery it is 600, it is 500. Instead of that I can write it as a machinery account 100, accumulated depreciation account 200, okay, to cash 240 to profit on transfer of machinery 60. So this is the exact and proper journal entry Okay, this is the exact and proper journal entry. It's a consolidated journal entry. You can provide this journal entry, that's enough. For the understanding of this journal entry, I'm just providing it. If you want, you can write this journal entry also. So this is the proper journal entry, and you can provide on net carrying amounts also. That is not a big deal. Okay. So question number 6 is completed. Then what next is question number 7. So on 1420, Vishnu Limited installed a machine in the rented premises at a cost of 25 lakhs, whose life is 3 years. So now as per the rental agreement, the machinery should be decommissioned and building should be brought into original position. The company should incur 4 lakh at the end of the third year. So Vishnu Limited purchased a machine, right? So what is the cost of the machine? 25. It comes under the 1. And as per the rental agreement, what is the decommissioning expenses? 4 lakhs. But these 4 lakhs should be incurred at the end of the third year. Then we should make the present value of this 4 lakhs. Present value of 4 lakh at the rate of 10% for 3 years. Then record the journal entry. So 4 lakhs into 0.71. How you got this 0.71? 1 divided by 1.1. How you got this 1.1 divided by? So 1 divided by 1 plus 10% divided by 1 plus 0.1. Then it becomes 1.1. Okay. Into equal to 3 times. So you should do 1 divided by 1.1. You should press on equal to 3 times. 1, 2, 3. Then it becomes 0.71. So 4 lakh rupees into 0.71, 3 lakh 400. So the present value of, if you wanted to pay this cost today, you should incur a cost of 3 lakh 400. But you are not paying these 3 lakh 400 today. So you should record it as a liability and you will incur it in the future. So the total cost of PPE should be included 25 lakhs plus 3 lakh 400, 28 lakh 400. Then coming to question number 8. So look at this. Residual value, useful life, depreciation method shall be reviewed at least once at each financial year end. And any changes accounted as a change in accounting estimate. If any change in residual value, any change in useful life, any change in depreciation method should be treated as a change in accounting estimate. So I will give you the definition of the accounting estimates, accounting errors and the changes in accounting policies till later point of time. So but currently, so treated it as a accounting estimate, change in accounting estimate. So change in depreciation method for an item of PPE is a change in accounting estimate, not a change in accounting policy. So do you agree? So they're saying that change in the depreciation method is a change in accounting estimate. It's not a change in accounting policy. Yes, we can agree with this statement. So as giving the information. So depreciation method helps the accountants in aligning the recognition of the cost with the benefits rendered by the assets as per the requirements of Ind AS 16. Requires the rate of depreciation to match the rate at which benefit are extracted from the asset. Okay. That the depreciation method is in itself an estimation of consumption utility in the asset. So you no need to write all this. Okay. What is the depreciation? Depreciation means the carrying amount of the asset should be transferred to the P&L over the period of time. Okay, to match the revenues. On the same footing, change in the depreciation method is not a change in accounting policy, rather than it is a change in accounting estimate. Our discussion should start from here. You no need to write all this statement. Okay. Then change in accounting policy only occurs if the rules of the either recognition, measurement or presentation of line item are changed. Here, no recognition elements are changed, no measurement rules are changed, no presentation rules are changed. That's why this is not a change in accounting policy, this is a change in accounting estimate. Okay. So change in depreciation method is changes of neither of these. Okay. Then further confirmed by Ind AS 8, the definition of the change in accounting estimate. A change in accounting estimate means an adjustment of the carrying amount of an asset or liability or the amount of the periodic consumption of an asset that results from the assessment of present status and expected future benefits and obligations associated with assets and liabilities. And change in accounting estimates result from new information and new developments accordingly, not it's a correction of errors. So depreciation is an adjustment of the carrying amount of assets over the useful life correctly to project the state of the affairs of the business. Hence it is a change in accounting estimate, not in policy. What he's saying, he is giving the definition of the accounting policy. What is meant by accounting policy? How you can say that there is a change in accounting policy? If there is a change in presentation rules or measurement rules, in presentation rules, measurement rules, recognition rules, then we can say that there is a change in accounting policy. But here there is no change in recognition rules, measurement rules, presentation rules. That's why we need to call it as accounting estimate. And after that, they has given the definition for accounting estimate. Definition for change in accounting estimate. Here they are not giving the definition for the accounting estimate or accounting policy. Their discussion is focusing on change in accounting estimate. When can we say that there is a change in accounting estimate? When can you say that there is a change in accounting policy? So already they have discussed when can we say that there is a change in accounting policy. There is a change in recognition rules, presentation rules, disclosure rules. Then we can say that there is a change in accounting policy. But coming to what is meant by change in accounting estimate? If the new information and new developments are coming, then we can say that there is a change in accounting estimate. Okay, if the new information or new developments are coming, we can say that there is a change in accounting estimates. But these changes are not, we need to call it as a correction of errors. And one more thing, you no need to write this element also. One minute. So you no need to write this red color highlighted area. So just you should write this point, and after this you can start from here. Changes in accounting estimate result from new information and new developments. After that, depreciation is an adjustment of the carrying amount of assets over its useful life. That's all. Then the answer is over. Okay, you no need to write is everything. Just they're giving the all the things. Next, question number 9. Question number 9 is very important. Okay, so it's a previous examination question. Past examination question. And it involves lot of conceptual knowledge also. Question number, please tell me the question number. Question number 9. Let's read the question first. So D Limited has incurred the following transactions in respect of acquiring a plant in exchange of old plant. So they are acquiring a new plant, right? How they are acquiring? In exchange of the new old plant. Sorry. Okay. Yeah, this is also past examination question, but this is not so important. Okay. Next question. Okay. So question number 9 is same as question number 10, right? Sorry. It's question number. Wait. Discuss question number 9. It is as same as question number 3. Then Let's come to question number 10. So this is an important question, okay. So this is also a past examination question. Question number 10. On 1415, borrowed 5 lakh rupees at the rate of 12% per annum to construct a 10 missions. So they borrowed a 12% per annum to construct a 10 missions. So you should have the knowledge of India's 23 also. So already in concept book we have included that. So if you have taken any loan, that loan amount, that interest amount should be transferred to P&L generally. Otherwise, if the loan is incurred on the qualifying asset, then the interest with respect to that loan amount should be capitalized to the cost of the asset. So you should have this knowledge, and this point should be, you can relate it at question number 10. Okay. So the problem starts from 1415. So I have drawn a timeline diagram. The question starts from 1415. Okay. So on 1415, what happened? Borrowed 5 lakh rupees loan at the rate of 12% per annum. So on this date, borrowed, what is the date of taking of loan? 1415, 5 lakh rupees. Then on 10 missions. So they are giving that what are the expenses incurred on materials. So 8 lakhs incurred on materials, and 2 lakhs on labor, and 50,000 towards freight and insurance, 20,000 towards carriage inwards, and 10,000 on site preparation and installation, and estimated total physical life is 10 years, but the company considered it is likely that it will sell the property after 4 years. So here my doubt is, there is two lives. One is physical life and the other one is useful life. Sorry. One is physical life and other one is the company wanted to sell it in the nearby future. So after 4 years. So this is useful life. How much they are using it in their premises? Only 4 years. But what is the physical life? 10. Can I take 10 years or 4 years for the depreciation? So that is the first doubt it will arise in this question. So this 4 years should be considered for the depreciation. Okay. You should not consider the normal physical value. You should consider the how much this asset should be or going to be used in your organization. So 4 years. Then second element, at what cost should be asset is recognized on 1415? In 1415, materials 8. So materials 8 plus 2 lakh is the labor on 50,000, freight and insurance, and 20,000 carriage inwards, and 10,000 site preparation. 10 lakh 80,000. Okay. So up to here 10 lakh 80,000. 10 lakh 80,000. Okay. 8 lakh plus 2 lakh plus 50, 20 and 10. Then after that what happened? Let's see. And the two we have borrowed a loan. The two we have a borrowed loan on 1415. I will tell you what we are going to do next. Then on 14/2016, the machine become ready for trial run. Okay. It's not ready to use. The machine is ready but not for use but for trial run. So for trial run production, after incurring an expenses of trial run 20,000. And what is the trial run expenses? 20,000. And the sale proceeds of the goods produced during the trial run 5,000. Now tell me, what is the net trial expenses? 20,000 is the gross trial expenses and 5,000 income generated from the products of this trial run. So I got 15,000. This 15,000 is the net trial expenses. Okay, so this should be included to the cost of the asset. So this also included to the cost of the asset. This is not trial, it net trial expenses. Then after that I should include the interest. Wait, after reading of the question you can get the clarity. On 1/1/2017 the mission is ready for commercial production. What is the ready to use? What is the date of ready to use? Ready to use on 1/1/17. So what is the estimated residual value? 2 lakh rupees. And government grant received for these missions 2 lakh rupees. Okay. Then the company does not begin using the mission until 1st April 2017 and put the missions to the commence the commercial production on 1/4/2017. So what is the put to use date? So because on this date onwards he has putting the missions into commercial production. So this is put to use date. But 1/1/17 is ready to use date. Now, so when can from which date I should stop the expenses, capitalization of the expenses which are incurred directly with the mission? So what is the stopping date for the capitalization of the expenses? So there are two dates, right? Ready to use is there and put to use is there. Ready to use is 1/1/17 and put to use is 31/3/17. First thing, so I should included the interest cost to the cost of the asset. Assumed the loan amount should be spent on the qualifying asset. So the interest cost should be included to the cost of the asset. And the interest cost should be, what happened? The interest cost should be added to the cost of asset. Let's find out what is the interest. Date of taking of loan is 1/4/15. Okay. And the interest cost should be added to the cost of the asset. When should we stop it? On 1/1/2017. Sorry. Okay. So 5 lakh into 12% into. So when should we stop the capitalization of the expenses? On 1 ready to use 1/1/2017. So what is the duration between 1/1/15 to 2017? 21 months. So the duration is 21 months. So 21 months interest should be added to the cost of the asset. So 21 months interest, 5 lakh into 12% into 21 divided by 12, we got 1,05,000. Then we have received government grant, right? What is the government grant value? 2 lakh rupees. This should be deducted from the cost of the asset because this is an income with respect to the government, with respect to the asset. So this amount should be deducted from the cost of the asset. 10 lakhs. Then what is the cost of the asset as on 1/4/2015? 10 lakh rupees. So when should I recognize this asset in my books? On 1/1. So the cost of the asset as on 1/1/2017 because the machinery is ready to use in our business from 1/1/2017. Let's see. The expenses incurred on PPE up to the date of ready to use should be capitalized. Okay. The expenses incurred on PPE up to the date of ready to use should be capitalized. And the expenses incurred after the date of ready to use should be transferred to P&L. If the ready to use is not available in the question, and we can take put to use also. Okay. We can take the put to use for the purpose of cessation of the capitalization of the expenses. Okay. What is the interest here? Here is also interest is also a type of expenses. So that expenses also should be stopped on which date? That expenses should be added to the cost of the asset, right? But that capitalization of the expenses should be stopped from 1/1/2017. So that's why that interest portion should be added to the cost of the asset for that period. On 1/1/2017, then what is the carrying amount of 10 missions? Because all these amounts are incurred on how many missions? 10 missions. So the carrying amount of the 10 missions is 10 lakh rupees. Then I need the residual value of 10 missions. Please tell me the residual amount of 10 missions. Is it available in the question? Okay. So the residual value is 2 lakh rupees. This is the residual value of the 10 missions. Let's see what are the changes here. So on 1/10/2017, sold one mission for 93,500. So when we have recognized the asset in my books, I have recognized the asset in my books on the date of ready to use, that is 1/1/2017. So on 1/1/2017, so I can recognize the asset in my books of accounts. From that date onwards, I need to provide the depreciation. So from that date onwards, I need to provide the depreciation. So I need to find out the carrying amount as on 31st/3/2017. So opening carrying amount 10 lakhs, and depreciation, I need to provide depreciation for 3 months, because the opening carrying value as on 1/1/2017. So 10 lakhs is the opening carrying amount minus what is the expected residual value? 2 lakh. What is the useful life? Whether I can take 10 years or 4 years? 4 years only. So that is the physical life. I am not considering it. I should see the whether how many years this asset is going to be used in my business. 4 years. 4 divided by 4 into 3/12, 50,000. Then what is the closing carrying amount as on 31st/3/2017? 9,50,000. Then what is the total useful life? Because here I am providing the depreciation for 3 months, right? So every time while providing the depreciation, what I am observing? Expected useful life. How I am observing expected useful life? So what original useful life is 4 years. Out of 4 years, if I provided depreciation for 1 year, so remaining is 3. So I compare opening minus depreciation, current year depreciation, then I got the closing. But here opening is in years, but depreciation is in months. That's why for the easy calculation, convert the useful life into months. So what is the useful life in months? 48 months. Out of 48 months, 3 months is completed. So remaining depreciation I need to provide it for a period of 45 months. Then what is the opening carrying amount? As on 31/4/2018, 9,50,000. So there is something happening in 2017 and 18. During the financial year 17-18, they sold one mission for 70 during the 17 for 93,500. So what is the opening carrying amount? 9,50,000. So I should find out the closing carrying amount of 10 missions on 1/10/2016, because I have sold one mission for 93,500 on 1/1/2017, right? So I should de-recognize this asset value. So I should de-recognize this machinery from my books of accounts. For de-recognizing, I cannot use the 93,500. I should use the what is the closing carrying amount of this one mission as on 1/10/2017. So first find out the closing carrying amount of 10 missions on 1/10/2017, and we can find out the one carrying mission, and we can find out the carrying amount of one mission. So carrying amount of 10 missions on 1/10/2017. How we can provide? So this is the opening carrying amount. So I need to provide the depreciation for 6 months, because I need the carrying amount as on 1/10/2017. Okay, 1st October 2017, it becomes 6 months. So for the half of the year. So what is the depreciation? 1 lakh rupees. So the carrying amount of the 10 missions on 1/10/2017 is 8,50,000 minus, we are going to deduct the carrying amount of one mission. What is the carrying amount of one mission? For 10 lakh, for 10 missions it is 8.5 lakh. For one mission it is how much? So the carrying amount of one machine is 85,000. So 8,50,000 minus 85,000, then you can get 7,65,000. So this is the carrying amount of 9 machines as on 1/10/2017. Then we should provide the depreciation for remaining 6 months in 17/18. So what is the depreciation for remaining 6 months? 7,65,000, okay, minus, what is the residual value? I need the residual value. Sorry, what is the total residual value? What is the total residual value? 2 lakh rupees. Okay. So you want me to deduct 2 lakh rupees, right? No. Because this 2 lakh rupees residual value is with respect to entire 10 missions. Now how many missions are there? Only 9. So 1,80,000 should be deducted, divided by, what is the useful life? So already, what is the useful life? 48. Out of 48, we already provided depreciation for 3 months here. Again, I provided depreciation for 6 months here. What is the remaining now? 30. Tell me the remaining expected useful life. 39. 765 minus 1,80,000 divided by 39. Okay. 7,65,000. Okay. So it is a depreciation for how many months? It's a depreciation per annum. But I need depreciation for 6 months, right? So into 12 divided by 6. So you have the detailed discussion here. Okay. Detailed calculation here. So 7,65,000 minus 1,80,000 divided by 39 months. Okay. Into 6 months. So this is a depreciation for 12 months. So I need a depreciation for 6 months. So divided by 12 into 6. Sorry. Okay. I have provided the depreciation for each month. Okay. Because I have given in not in year side. So I have given in months. So I got the depreciation each month. So I add the depreciation for 6 months. So that's why I made it as into 6. Don't use divided by 12. Okay. If the depreciation is given in years only, then I can use the word divided by 12. Okay. So this is the important aspect. If this information is you can able to revive it, then reviving everything is easy. Then what happened now? So carrying amount of 9 missions 7,65,000. So depreciation for 6 months 90,000. This 90,000 calculation is important. 90,000. This is an important. So I got the closing carrying amount. What is the closing carrying amount? As on 31st/3/18, 6,75,000. Expected remaining residual value is 1,80,000. This only there is a chance of error. Okay. What happened 19? In 18/19, are there any adjustments? Yes. In 19/19, the residual value is re-estimated at 2,20,000. The property is revalued upwards by 45,000. On which rate? 31st/3/19. But am I providing revaluation gain on 31st/3/19? Here it has happened in during 18/19. Assumed it has been happened on the revaluation. The property is revalued upwards by 45,000. It happened on 1/4/2000. Sorry, 1/4/2018. Don't take 1/4/2019. It will go to other year. But here they are giving the information regarding with 18/19. In 18/19, revaluation made upwards by 45,000. So it doesn't mean that it happened on 31st/3/19. The information is given with respect to 1819 and in 1819 the revaluation upwards by 45,000. So the revaluation always made at beginning of the year. What is the beginning of the year of 1819? 1418. So 1418, 45,000. On 1418, what is the carrying amount? 6. So 7,20,000 because they are giving the revaluation gain 45,000. Then the revaluation opening carrying amount after revaluation 7,20,000. So I need to provide the depreciation for 12 months. So opening carrying amount 7,20,000 minus. So what is the expected residual value? What is the expected residual value? So the expected residual value is re-estimated 2,20,000. Take 2,20,000. And again the remaining expected useful life becomes 4 years. So 4 year means again it is 48 months. So divided by 48 into 12 months. So I got the depreciation per month. I need the depreciation for 12 months. So 1,25,000. So the closing carrying amount as on 31st/3/19, 5,95,000. Then coming to financial year 1920, what is the opening carrying amount? 5,95,000 minus depreciation for 1920 at the rate of 20%. Why? Because in 1920, it means 31st/3/2020, the company decides to adopt return on value method. So from this date onwards, I can follow the return on value method. What is the return on value method? On opening carrying amount, I need to calculate the fixed percentage of depreciation that should be deducted from the opening carrying amount of the asset. Then I got the closing carrying amount. And what happened in 2021? So this is 1920. Sorry. This is 1920. This is 2021. What happened in 2021? The machines become idle and are retired from the active use but not held for disposal. The machines becoming idle. Even though the machine becomes idle, I should provide the depreciation. So I have provided depreciation 95, 200, 380, 800. Then 21, 22. In 21, 22, the idle machines are held for disposal, but the machines could not be disposed of till the end of the year when the realizable value of the machine is 75% of the carrying amount subjected to 10% realizable expenses. Here what happened? The machineries are classified as held for disposal. So from Ind AS 16.2, it should be classified under Ind AS 105. The non-current assets held for use. The non-current assets held for sale. So the non-current assets held for sale should be shown at realizable value minus expenses. So what is the realizable value? 75% of the carrying amount. So what is the opening carrying amount? 3,88,800. So what is your fair value? 3,88,800 into 75%. Now the asset should be shown at 2,85,600. This is the fair value. But of course, from this fair value, I should reduce the cost to sell. How much is the cost to sell? 2,85,500 into 10%. So 25,560. Then it is a closing carrying amount on 31st/3/2022 as per Ind AS 105. Okay, 257. Then coming to 22-23, what happened? The idle machines are held for disposed during the year are actually disposed of for 75% of the carrying amount. So what is the opening carrying amount? 257,040. So what is the sale value? The assets are sold at 75% of their carrying amount. So 257,040 into 75% is 1,92,870. Then what is the loss on sale of plant and machinery? 64,260. Then what is the closing carrying amount of 9 machines? It becomes nil. Okay. Just they have given the 64,260. 64,260. So they are giving the just answers, but you should follow our notes. Okay. So thank you guys.